Yeah, it's going to be very difficult for all of the strategic petroleum reserve releases happening across the globe to make up for the shortfall in supply coming out of the Gulf countries. Something like 20% of global oil flows through the region. And so, as long as the Strait of Hormuz remains closed, I think it's very challenging to balance the global oil market. And so I think that the way to be thinking about this question is just how long do you think the Strait of Hormuz is going to be closed? And that's probably the central lever for thinking about where crude goes over the next few months.
And so if the conflict drags on, how high realistically do you think oil prices can go?
There are a lot of estimates out there.
Yeah.
So our team at Bloomberg Intelligence, alongside of Bloomberg Economics, we do have scenarios that extend up to 150 a barrel or higher, and that's under a scenario where you would imagine the strait being closed for 3 months or longer. If you imagine there's a quick resolution to the conflict, maybe within the next few weeks even, we could easily be back down in the $70 per barrel range, right? So I think a lot of things really depend on how long you think the hostilities will continue. Prior to the conflict, most analysts were thinking about the global oil market as being oversupplied this year and had a pretty bearish tilt. So the geopolitics has really been the key driver here over the last few weeks.
Rob, you just said that oil might be able to go back to 70 a barrel if we were to open up the Strait of Hormuz here in the next few weeks. I'm impressed by that because I thought there would be sort of this lag time to come back to normal, if you will. So do you, I mean, it's not like they're just going to, turn on a switch, right, or flip a switch. I mean, do you think, though, we're going to see that impact on the street relatively quickly?
Well, again, I think it's probably a pretty optimistic scenario to assume that you could get some kind of normalization within the 1 to 2 week time frame. Although I think that I saw President Trump was speaking to some of the G7 countries earlier today and was talking in those terms. So let's see. But you were right. It will take. If you had a magic wand and you could open everything today, we're talking about months to normalize things, but markets are forward looking. And so I think the oil price could respond relatively quickly if there is a sense that things will settle out in equilibrium. If all of the crude is allowed to flow through the Middle East as it had been prior to the U.S.-Israeli strikes against Iran, you would be talking about an oversupply of several million barrels per day. And so that's kind of the equilibrium point. And I would acknowledge that you won't get to that immediately, but that's where you might be by the end of the year if things do normalize.